Well, hello Switzerland, I'm L.A. Little and welcome to this week's edition of your Swiss Neoclassical TA Wrap. Here at NeoTA we go where others fail to go, and that is as we look at supply and demand on the charts. We use that to determine direction and timing on all time frames, so sit back, take a few notes, and let's take a look at these markets. Let's start with the performance of the markets both the past week and year to date. Of course, year-to-date's been pretty tough, but for the most part here, pretty good gains last week, in particular on SLI. We'll see in a minute a big piece of that was tied to a couple of individual stocks, in particular a takeover bid for Syngenta. And elsewhere, good gains. I mean, they got pushed back up. Year to date, still in the negative territory, 7% on the SLI, SMI. The broad market 5.5%. Small caps still leading on the upside, 4.5% higher. Let's look at it from a sector perspective. And on the sectors, you'll see that big pop up in the basic material, 6.54. That was the takeover, finally getting approved on Syngenta, or at least getting past the biggest hurdle that was out there. You had gains here on the industrials. Again, now they've been a strong group the last month and a half, 2.5% here on telecom. Big move up in financials, and elsewhere just kind of red. The basic thing that we're seeing right now is we're seeing money come out of those things that are safe, like consumer goods, the healthcare, even the consumer services, and we saw a little pullback in technology. Year to date, you can see the big gains in technology, also in the industrial complex. The basic materials haven't been anything to sneeze about now with that big push last week, but the other big market mover has been utilities. And so it's going to be curious to watch these utilities and see if the money kind of dries up. It just seems like that's the one safety sector nobody's leaving, although they are having some second thoughts here about some of the consumer names. Looking at the market, let's look at the broad market. Let's start here with the SPIX. On the SPIX, you got, you had 5 days pretty much sideways. You got a little bump up overall. If we go back and look at this, right, there's a number of things that we can look at and we can say that, hey, this thing is doing okay. The question is there something more to what we see here? In particular, for example, are we seeing some ABCD structures beginning to form again? For example, on this latest one, do we have an ABCD structure? Didn't get back underneath here. Is this thing going to now push up and try to get that run higher? You'd gotten over a swing point high. You tested it, was unable to hold it. That's not a good sign. That kind of got us a little bit safer, saying, hey, this thing, at least on this time frame, instead of it pointing up, it's probably pointing more sideways, and that's kind of what we got last week. Question this week is it able to start trying to push back up there? And I think as we look at this market, we'll see that there's a decent chance it's going to try to do that. So that's the big question coming up for the week. If we go to the small caps, take a look at those. They had a decent gain again. Nothing huge, but a little decent gain here. There's not a lot to say about small caps. I mean, they've been so strong for so long, and they continue to do the same thing. They've completed ABCD structure after ABCD structure. Now, they did have that one blip down off the Brexit news back here, but other than that, all year long, these things have been the leaders, right? They keep getting these structures up, a little nested ABCD structures inside of them. These that go up then form new ones, right? So the A to B, the C point now becomes the A goes up, extends. Now you got a new A, B, C, D, and it just keeps going. So is this just another one getting ready to go underway? The pullback has been reasonably well contained. I don't see anything alarming. You have a little bit of a ledge forming. If you're in this sector, right, or in this index, you want to see it start to push up here again. This is the big bar. That's where you want to look for it to get over. If it gets over that, it goes up and attacks the high again. So that's what I'd be looking for in the small caps. If we go to the more concentrated view here, we'll start with the 30 large caps. You got, a nice big breakout took place. You come back down. As you come back down, you retest and attempt to regenerate. Unfortunately, it did not hold. Again, saying more sideways than up. You kind of getting that sideways action. You can do that for a little while, but you're going to want to see it start to push up again before too much longer. Otherwise, lest you have a bigger problem longer term. Let's pull over the weekly, though, because the weekly is where the real story is going to be told or not told, and that is that you've got these two swing point highs. They're almost coincident in terms of price. As this thing is moving up, right, it's going to try to get over those, or it's certainly going to try to test them. It's also the breakdown bars high off this move down, and that's where volume is. So what I want to see if I'm bullish this market is I want to see these swing point highs taken out along with the breakdown bar, and then that would give me confidence that we're going to go up to the next breakdown bars high. So that's what it is on this thing. Now, there's a couple other things that we can notice here at the same time. It's not just that. The first thing is that we actually broke here. We broke this swing point low. That was a bearish retest and attempt to regenerate. Didn't even have a chance. It just went straight through it. That's a good sign. That tells you, hey, this thing's got a little bit more strength than you think. That's what gave us some confidence that we're going to go sideways to higher. If we go up to the next one, it's right up here. Notice where it falls, right in the same area, right, that we were just talking about. That makes that doubly important. This whole little zone here makes it very important as you come back to it, because if you are able to, push through that, then that's going to turn this into a big double bottom type low, right, and give more confidence to the buyers to try and press this thing higher. And so this is going to be a big area as we come back to test it. And it does look like it's going to try and test it. And I'll show you one more reason that looks to be the case, and that is that you do have an ABCD structure that has fired now and was protected on the downslide. So in other words, you get over it on this bar, you get over that swing point, not the swing point, but the B point of an ABCD structure. The very next bar, you take it all the way, you try to break it down, and then you come right back up. So it's defended that area, which is what you wanted to do, and now it's trying to push again. That's going to lead it into here. If it gets over it, I think you can get the juice to finish this off, which is going to be almost coincident with that high up there. So that's what I'm looking at, and I like the way this is shaping up. And finally, if I had to do one more thing on this time frame, I would note that you had big volume down here with long tails, 3 in a row, actually 4 in a row. And the thing that I really liked about it is that when it did all this, it did it in the way that you'd want it, and that is that it got tested, got underneath it, volumes high, volume lower, big wide price spread, hammer reversal, and then the continuation. That's really the kind of setup that not always, but many times can lead to something larger on the upside. So when I look at the concentrated 30, it looks pretty good to me. I like the way they're starting to set up. If we go to the 20, the large caps, not as clean. Pop in here to the weekly, you got the same sort of setup here. So I like the way this market is setting up. I've said for a long time I like the way the Swiss market is the leader for the most part. In Europe, I like the way it's acting there. To me, it's the best signal in the European continent right now. And the signals it's generating is that it wants to try and trade higher. I'm switching over to the DAX to show you what that looks like. So the DAX had a nice big push up here, right? And then you kind of tailed off and you're doing consolidation up there, right? Volume's low during the summer. That's nothing new. If we pull it over, put it on the weekly, now the DAX looks a little different, and that is that it's already gotten over its swing point high and pushed up above it, right? And that was the retest that started to take place off these two swing point highs the last 2 weeks. Volume tails off. All of that's positive. That also looks as if the DAX is setting up for something larger to the upside. And matter of fact, what we're looking at here, if that's true, is this is an ABCD structure potentially starting to take place that could push this quite a bit higher. if it stays this tight in this area, right? If it doesn't pull down deeper. Could it pull down deeper? Sure, it could. That's the one drawback here, is you could definitely pull back into this low. That price point on the DAX is about 10,040 to be exact. That would still be bullish, would kind of cut down this ABCD structure. And given the way this market has traded, it wouldn't be surprising to see it come back deeper. And so if there's an outside chance of some issues, some more consolidation, it looks to me like it's going to come from the other members over there in the EU, more so than the Swiss market itself. The FTSE, you see what that one looks like. Still holding high as they depreciate their currency. Nice big run up. This is also due for a little bit more of a pullback into this swing point high that it broke. That low would still be bullish, about 66.44. Finally, look at the CACs over in France, and let's see what the weekly looks like on it. This looks more like the Swiss market where it's trying to get up and over. So I would watch the DAX on any kind of pullback, and I'd also look at that Swiss market to see that it continues to hold on that ABCD structure to the upside that's already broken. If we go into the sectors and take a look at those, we've had really good strength in the industrial sector. So you got a big push up, right? If we do the measurement on this, and the numbers are big enough, we can just do it arithmetically. That's about 1132. That top was, well, you actually have another one here. The actually top is down here. So that's, what did I say that was? That was 1152 up to, that's about 65 points onto this one. Gets us about 78. And 1278 was met, and now you have another one potentially setting up. Volume's low. I can't see anything wrong with that chart. Bring it over here. You had breakouts. Could it pull back and do this? Yeah, at some point. Right now, it doesn't look like it wants to. If I pull over the monthly, this does look like it wants to attack those highs before it's done. And here you actually have a large ABCD structure still in effect. And so if I'm looking at it here on the monthly, you know, I've got the A point. Well, actually, it doesn't even have an ABCD structure. It's still in the A to B. It hasn't even finished it yet. And so, you know, I guess I thought there was one there, but that really isn't one. You don't have a lower low, lower high. So that's, you know, but, you know, when you look at this, you got two swing point highs. They're all almost coincident in price. This is heading up. Got wide price spread action on the way up. That just looks like it's going to go tag them, right? That's usually the way it happens. That's 1341. It's not that far away. I'd be surprised if it doesn't do another 2% and go hit them. That's the industrial. So I still think one has to be looking in that particular area for strength. Also, you know, we've seen good strength in the utilities. That hasn't changed. And I don't care what time frame you look at. These things, for the most part, just keep grinding up. They don't even care about any kind of a pullback at this point. Look at them on the monthly. They're over the swing point highs, gyrating up there. Look like they're just going to keep grinding to me. And that's a big rounded turn if you're looking at it in a long-term perspective. Right, so you've had this nice big rounding turn that's taken place. And that's the sort of turn that can last, right? You get the push up, you get the pull back, now you get over it, you get over your swing points, now you can start grinding, net volumes coming in. This is a good looking sector. There's nothing wrong with the utility sector. And it probably, you know, dividend wise, you can be kind of safe and be getting some dividends as well as appreciation. Finally, if we look at the tech sector, the tech sector pulled back, and let's pull that one up. Pulled back, actually did a little hammer at the end, pulled in this big bar. That's the sort of action you'd like to see. In other words, when I come back into something of significance like this was, I really don't want to see it get more than a third down into that and close. You know, when I say get down, I don't want to see it close more than a third down. And a third, and a third's about like that. You can see this got much deeper than that, but by the end of the week, it had flipped around, and the long tail, it tells you who won the bar. The bar was won by those who wanted to buy, not sell. That's a good positive. This still looks like a good sector to be in. On the negative side, you actually had some good action in the financials last week. They pushed up, but this has been a sore spot. I'd probably want to see it prove me a little bit more to the upside. That test, that swing point high, when and if it gets up there, they're 5% higher, and even this bar's high, which is at 16. Those are going to be 2.5%, 5% higher. Those are going to be hard things to get over. And so I can't get too excited, like we were just looking on the utilities on the long-term chart. I can't get too excited with the idea of a rolling bottom here until I see something like this start to break. And so from that perspective, I just have to kind of sit, watch, pick my spots if I'm going to, with a few individual names inside that group. Those are the strong sectors. Where's the worry coming from right now? Well, it's the one that's kind of turning, and that's the durables. The consumer is not actually participating and not pushing these stocks higher. You had a nice big push off. They're coming back in to do retest, regens. It is the second time back. The probabilities fall as a result of that, and those are pretty wide price spreads. So as it comes back, it could get deep into this time. So I'd be a little careful in this particular sector going forward. As far as what do we think is going to happen, when I look at everything, put it all together, and and ask myself the same question, clearly, to me at least, this has a positive tone to it. It's just that given the time of the year, another week of consolidation would make a lot of sense. And you could even get 2 or 3 weeks of consolidation before it tries to take off. Key is going to be getting over this swing point high and staying over it on the way back up and keeping up there this time. If you do, it's going to be a real big positive, and then you can go attack the higher highs. That's it for, and actually I didn't show this chart. This was probably the best one to show. Let me just finish off the show with this. You actually had an ABCD structure in effect here. It got back in, right? It's testing back underneath the B point. You really don't want it to stay down here. It's 2 bars already. You really want to see it get back over it. And so this week, even if it consolidates, you'd like to see it consolidate and close back in the upper half of this, coincident with this high and that breakdown bar's high. That would give you more confidence that the path of least resistance really is up, right, instead of down. So let's see if that's what it can do. I suspect we're going to try to grind higher again this week. That's it for tonight. Have a good one. Thanks for joining me. Take care, and I'll see you next time.